You wanted the best. You've got the best podcast. The hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
I'm Chris Voss here from thechrisvossshow.com. There you go, ladies and gentlemen. There are only 6 of them makes official. Welcome to the big show. As always, the Chris Voss Show is a family that loved you. And we just encourage you to learn more, grow more, be more, do more. It's the beginning of January 2026. We're going to be talking about how to start planning for, your taxes. January 26th, we got the April coming up there, a big tax date there. And you always want to make sure you take care of that. So we're going to be talking to a wonderful guest who's returning to the show. But in the meantime, I need you to go to goodreads.com/Chris Voss, linkedin.com/Chris Voss, Chris Voss one on the TikTokity, and all the other crazy places on the internet. Today, we have an amazing young man on the show. We're going to be talking to him about his insights and how you can better prepare for tax season, as it were. And he is Douglas Carpenter. He's a CFA, CPA, and he's a certified public accountant, chartered financial analyst. He brings to companies over 40 years of business experience. He began his career at the age of 17, becoming the youngest registered stockbroker in America. He majored in accounting, worked for 5 years at a top 4 accounting firm, and moved on to various consulting and chief financial officer positions. He has owned and operated Comprehensive Accounting Solution for 7 years. The firm provides a full range of accounting services to companies in all industries, with a specialty in the challenging hospitality sector. The firm has a high-end specialty in providing tax savings strategies to small businesses. Welcome to the show, Douglas. How are you?
Thank you very much. That was a wonderful introduction. Looking forward to sharing with the audience what they should be doing right about now in January to prepare for the entire year for their taxes. Get everything nicely organized, so by the end of the year, you've taken advantage of some of the things you need to, and you're well planned out.
There you go. Well, I think people's hangover from the first on New Year's Eve is finally wearing off, so it's probably time to focus on that, huh?
Yes. Well, it's not too late to start. It never is. But January is a good month. You're a couple of weeks into the year. You probably haven't lost much in terms of planning, and now's the time to start.
There you go. So give us your .coms to lead off so people can find you on the interwebs.
Sure. The .com is obviously www. It's solutions. That's with an S. Solutions by BYCHS.com. Charlie Henry Samuel. Solutions by CHS.com. Our specialty is in hospitality, but we serve all kinds of businesses. We do a lot of construction businesses, dental offices, moving companies, all kinds. But hospitality is a unique sector. Needs a little extra attention on some things, and we provide that.
Why is hospitality maybe your specialty, or what's special about it in the tax sort of demand? Are there special write-offs and paperwork they got to do?
Well, that's a good question. It's really on two levels. The accounting side is a little more challenging because there's a lot of different revenue streams that can come into a hospitality business. There's a lot of invoicing. I've worked for large manufacturing companies, $100 million, that don't have the number of invoices that come into a restaurant. They order all kinds of different things, and they're all different vendors and things that come in. They have delivery platforms. You have Grubhub and Uber Eats sending out money. You have sit-down diners. You have people. You have complaints. You have credits. You have credits from your vendors. You have customers you're giving credits and discounts to, different programs. So there's so many different aspects to running a hospitality business. And I just mentioned restaurants. Hotels are also another challenging field. There's all kinds of taxes that hit them. Mm-hmm. In particular, though, restaurants would have the FICA tip credit, which is a refund of FICA that's paid on tips. The payroll in restaurants can be challenging. You have to make sure you meet minimum wage requirements, particularly with tipped employees. So there's a lot of aspects to it, and there's both on the accounting side and also on the tax side.
Hey, Dennis, or Douglas, I'm sorry. So I don't know how much of that got saved by StreamYard, but that whole bit we ran into some internet issues, I think, on your end where it was just serving it kind of like really badly. Can
Oh,
you for my edit? Somehow you came out of it, so make sure everything's turned off on your computer in the background.
it absolutely is. I restarted
Okay, cool.
computer.
Uh,
So,
can you give me that again? I'm sorry to ask you that, but what I'll do is I'll edit that part out. But it just got munched.
oh
So
no, sorry about that.
no,
And I'm
no problem.
hardwired into the internet, so
Internet gods, they hate us.
it shouldn't be.
So give me that
Sure.
pitch again if you don't mind.
So to answer the question, the hospitality industry can be unique in that there's more challenges to it. They have a lot more invoices. I've been CFO of a $100 million manufacturing company. We didn't have as many invoices as some of these restaurants get. There's a lot of things that are happening in terms of revenue streams. They have delivery platforms. You have DoorDash, Uber Eats, Grubhub. They have managers that are using credit cards and other things that are very very labor intensive. A lot of different details that have to get pulled in. Of course, there's a tax side to this as well. They are subject to the FICA tip credit, which is credit they can receive when they file their taxes on FICA that's been paid on tips. They have to make sure the tip wages are up to minimum wage. So there's a lot of things that make a hospitality business unique.
There you go. There you go. And you guys really focused on it and stuff. So now, do you only work with corporations? I know I mentioned the thing that you help companies with tax strategies. Do you work with individual tax returns?
We do. Most of our individuals are connected to the companies that we work with, but we do have, I'll call them walk-ins. They're not really physically walking into our office, but they come in either by an email or recommendation, and we'll certainly handle the regular average consumer, but it's not our focus.
Okay. All right. There you go. So is there a certain size of company that you do business with?
Generally, it's on a smaller side. It's 50 million and under. The sweet spot, as we say, is probably from 1 million to about 15 million. That company tends to be growing. A lot of our businesses have multiple locations. Real estate businesses would have multiple properties. Restaurants would have multiple restaurants. Hotels, we do a bunch of hotels. They have multiple locations, 3-4 locations. So really, it's a combination both in terms of revenue and in terms of complexity. And I think we add the best value to the ones that have multi-locations. We'll show their financials side by side, compare the locations, see which ones are doing better and where they can improve.
There you go. So if you're multi-location, there might be some tax savings or tax strategies that you need to do to do that sort of thing. And so, is there a cap of the size of company you'll work with? Because I mentioned in the bio you work with small, medium companies, I think.
The largest company we're dealing with now has 350 million in sales. So
Wow.
I don't think there's that many companies above that. We could probably handle something bigger, but our target's much lower.
There you go. 350 million a year. Is that all? No, I'm just kidding. That's pretty darn good, actually.
Yes.
So there you go. Now, tell us a little bit about yourself. They always want to know about you a little bit. How did you grow up? What got you into accounting? Starting at 17, I took the stockbroker test. I had some new startup school, and they really botched teaching us. And I flunked it twice at 21. So how did you pass that at 17? And all those other things that get into the business. What drew you to it?
Yeah, I had an interest in stocks from a very early age. I started reading the Wall Street Journal actually in 4th grade.
Really?
Yeah, you know what?
Wow.
I didn't want to tell my parents this, but my mother used to give me, the Wall Street Journal was 25 cents back then. It's probably $4 today or whatever. It's 25 cents. And I used to take my ice cream money and I'd stop at the store and get the Wall Street Journal with it.
Wow.
I thought my mother would cut me off if she didn't, if she knew I was spending it on that. And then
you're educating yourself. I mean, geez.
Well, one day it went up to 30 cents. And I went home. I said, "Mom, ice cream is now 30 cents. But I used to read that and I got very into it. I'm reading all the books and getting more and more into it. And, by 17, I was giving advice to people all the time, what to buy, what to look at. And I figured I could make money doing it.
So you were already handing out advice as a young boy child?
I had some pretty, honestly, I had some pretty good tips, but there was nothing really, I think, amazing to it. I picked good companies, picked
Oh.
companies you'd know and hear of, the blue chips, but there was usually a driving reason I would go, I might recommend something.
Hmm.
And that's, that at the time, that was one of the things I used to do.
That is wild, man. That's getting started early, but that's the good thing to do. Find what you find your purpose, find what you love. What is it you love about and maybe what drew you initially to, because I don't know if you still love it. I mean, I used to love owning businesses until I owned a couple that I didn't like, but uh,
Sure.
I got into it and I'm like, sure, I love this. So what was it that drew you to it? And then yeah, whatever question I asked before.
Yeah, well, I became a broker. I was being a broker at 17. I absolutely hated it. I absolutely hated the lifestyle. I hated there was more of a churn and burn kind of attitude
Wow.
that I couldn't do. That's not me.
Hmm.
And I wanted to give good advice to people, not just advice that made me a living. One of the things about a broker is if you give good advice to people, you often won't make enough money to stay in the business.
Oh.
So it was not for me. And I was in college at the time. I was in my first year of college, and I had a decision to make. It was either finance or accounting. And the way I looked at it was, an accountant can go into finance, but a finance person really can't go into accounting.
Why is
So
that?
there's a lot of training in accounting, and there's a lot of things to understand in the details. It's generally you're not going to go backwards, but an
Hmm.
accountant has a general understanding of finance and can kind of go forward into it. Now, I did both. I did the accounting, got the CPA, then I did the finance side and got the CFA.
Hmm.
What I like is the combination of the two. So the accounting tells you where the numbers are coming from and how they're derived and all the detail. And the finance side tells you what to do with those numbers, where to
Oh.
drive them and how to drive your business. So it's a good combination.
There you go. There you go. Really interesting, what's out there. So what are some of your favorite strategies, or, I don't want you to give away the secret sauce or anything like that, but what are some of your strategies that you find maybe owners are ignoring or missing, that they're, leaving a lot of money going back to the IRS
Yeah,
that they could get?
I think the biggest one and one of the first ones I look at is proper entity structure to make
Ah.
sure that they have the right entity. If you're going to make an S corp election, by the way, you have to do it by March 15th. So that's something to be aware of,
Mm.
to look at. S corps are a very good vehicle. They're not always the right answer. I also recommend you can talk to a formation attorney as well. They're well qualified to guide you as well, but I can give you some advice on that too. That's one area that I think we start at with a lot of business owners will not, potentially need to look at, or they haven't looked at it. And then it's also the combination. They may have 3 or 4 businesses, many of them do, and it might make sense to have one of them a C corp, one an S corp, an LLP, whatever that combination is, because each one offers its own tax advantages. And if you have legitimate businesses, especially if they do different things, there's a
Mhm.
lot of things that you can do tax wise to make that advantageous.
There you go. And let's talk a little bit about the competitive market of the tax business. I mean, I think we had one of the guys that created two of the biggest companies on taxes on the show a while ago. I forget his name. I'll see if I can pull it up. But what separates you from some of the big box names? There's these names that people kind of go to, and I don't know if there's any real benefit to them over you. Tell us what separates the two of you guys.
Well, first, I would say, one thing that's kind of interesting is I see the fees they charge, and there's a big surprise here when people come in, and the surprise is from me. I'm surprised at what they're getting charged for, to have these done. We have a standard price list. That's what we go by. Not
Hmm.
what you paid last year, but this is what we charge. Um, that's number one. But also with a big box, you got to be careful who you're getting. You
Mm.
can walk in the office and get someone with 30 years experience. You get someone that's had 5 minutes of training. I
Oh,
exaggerate,
wow. Yeah.
but a little training course, or they're an enrolled agent, and not, that's, you got to be careful who's looking at your books. But in any case, almost always you are getting your tax return done and not tax planning. The two are very, very different.
So expand on that, if you will, the difference between tax planning and the other.
Tax planning, if we're engaged for tax planning, you are specifically not going to get a tax return at the end of our engagement. I mean, we can do that as part of it if we want to, but from tax planning specifically, we're going to go through everything that you do, everything your business is doing, whatever else, and look at all the different ways that taxes can be saved as we go through all the elements from your payroll to the money you have, your personal side. Even if your business is losing money, there's probably some ways we can save in taxes. You're paying taxes whether it's obvious or not. FICA tax on your employees is something that's kind of hidden. You know you're paying it, it's there, but you don't think of it. Hey, my business is losing money, I don't pay any taxes. That's not true. There's a lot of taxes you are paying. You just don't really realize it. And there's also advantages on the personal side if you take that loss and use it correctly, as if it flows through to you. There's things that you may be able to utilize with tax losses, doing Roth conversions at the time and things like that could potentially save you as well. So that's a much more holistic approach than just getting your tax return done. 90%, probably higher, much higher percent of the population simply gets a tax return done, and that's fine. You have to do it, but there's a lot more to it.
There you go. There you go. So the difference with you is, I mean, you have, let's see, if I remember correctly, 40 years of experience. I mean, would I want you doing my taxes, or some guy who's chewing gum who just came out of college and he's like, I know what a 1040 is.
Yes. In addition to the 40 years, I would say probably there isn't a day that goes by that I'm not reading something about the tax laws. I actually enjoy it. I'll be walking up from my mailbox with the letter in hand, a tax newsletter, and I'm opening it as I'm walking up the driveway to start reading it, because I find it fascinating. And you know what? To be brutally honest, there's always something to learn. There's always more. Yeah, when you're done with the federal, there's 50 states out there with their own tax codes too. You can learn something about those as well.
What's that old line? The two constants in life are death and taxes.
Yes. So. And sometimes you can avoid the latter. You'll never avoid the former.
Yeah. I've been trying to figure out a way around that one, but evidently
with the right estate tax planning, you might be able to at least minimize the tax burden.
If I move to Canada, can I live forever? No, I'm just kidding. Nope. There you go. What else haven't we? Should people know about their planning coming up here? I mean, they've got 4 months, I think, and 3.5 months, maybe. Well, halfway, so probably 3 months. So what do they need to start doing now?
Sure. Well, you know what? I mean, there's also something to consider as a pass-through entity tax, which I won't get into too much detail as to what it is, but it allows you to write off the state tax contribution on your federal return within some limits and some boundaries. But for some states, you can elect it up to the point that you're actually paying the tax. So you go through the entire year, you don't even think about it, and then you make the election when you file your state return. For others, like New York State, you have until March 15th to make the election. You have to do it. So, and then you have to make quarterly payments. So that's something to be aware of. Something that's changed recently, too, regards pensions. If you wanted to set up, say, a SEP account, a SEP IRA, the old rule used to be it had to be done by December 31st. But under the Secure Act that they passed, you can actually do it up to the point of your tax extension. So if you said, oh, you know what, I didn't set up a pension plan for myself last year, I guess it's too late. It isn't. You can do it up to your extension, and if you don't have the money at the time of April 15th, go on extension. Of course, pay your taxes that are due, but go on extension. That gives you another 6 months to come up with the money to make that contribution.
There you go. There you go. Get her done, folks. You got to pay those taxes. Any other tips you want to take and do?
Well, the other thing is organization. One of the things, and I even recommend this for people on a personal level, is to keep those expenses organized. And there's so many apps out there that you can do it these days. You can have it on your phone. And I won't even get into which ones there are, but there's tons. I mean, if you Google them, there's lots. You can take a picture of your receipt and everything. Why do you need that as on a person? Well, let's say you make a donation to something. Put a little thing in there. Let's say you do something else that may have a tax consequence, put it there. And of course, if you own a business, it's very much so. You want to have all these things reported. But then at the end of the year, you've got all of these things that are nicely organized, and they'll remind you of what you're able to take. Another thing is, if you drive and use your car for business, make sure you have a mileage app. That's one that you get in your car, and it's going to probably ask you at the end of your trip, was this business or personal? And you're going to slide one way or the other, business, personal. And it helps you to not just know what you did, but to document it. If the IRS comes to you, they're going to want to see documentation. Those are perfect.
There you go. Yeah, it's wild. You got to make sure you get all those deductions, the write-offs. There's so many important things that you need to be able to take advantage of, because if they offer them to you, take them, right?
The important thing to remember: if you owe the tax, pay the tax, but don't overpay the tax.
Don't overpay. I mean, do what you owe, but there's so much stuff in the code of the IRS. What's going on with the code at the IRS? Have there been more? Is there anything new that's come out in the IRS code? Is there anything?
There's always something new. The last I checked, and I could be wrong, but I think the tax code is 29,000 pages. And that's just the federal, the state as well. There are some things that came out in the last bill. The One Big Beautiful Bill has changed things. It's actually a bit of a miracle. The IRS has updated all of its tax forms for this year. They should be ready by the third week of January. You can't even file your taxes yet. Not that too many people want to at this stage, but you have to wait until the IRS is ready for it. But they're getting their forms updated, which is quite a feat.
There you go. Is it hard to, I know they laid off a bunch of people, the IRS, or furloughed them. I don't know what the legal situation is, and contesting different orders of the president. What's it like dealing with the IRS these days? I mean, is it hard to get answers? I mean, that's probably all the more reason why people should use you, is because I think if you call the IRS, you might end up on hold for a while. I don't know.
You do. We, as accounting professionals, we have different numbers that we can call. They're still a long wait, and sometimes they don't answer, but it's better than the ones to the general public. But we will probably be able to answer your question without having to make that call.
Yeah.
The big thing I'll tell you, I mean, the IRS gets a bad rap. I really haven't had a bad experience with the IRS. They're not out to get you. Yeah. They're out to make sure that people are paying the right amount of tax. Kind of like that state trooper you see on the side of the road waiting for the speeder to come through. And okay, you're going 60 in a 55. He doesn't come after you. And not that that's a tax. But what he's doing is he's protecting you from the drunk drivers. He's protecting you from the people that are going 90 miles an hour on that road. So it's nice to see them when they're saying the IRS is kind of the same way. You know what? If they weren't here, the tax code would run amok. The government wouldn't get paid. That's what they're here to do. In terms of their customer service and answering questions, they do the best they can. They have been cut quite a bit. I'm surprised they're able to handle what they do. I mean, they have over 100 million tax returns come in. Think of that.
Wow.
Of that volume with 100,000 people handling it.
Wow.
It's incredible.
That's a lot of work. That's a lot of work. And then all that good stuff. Is there any favorite new tax codes that maybe you like, or is it pretty? It's kind of dependent probably on the industry and the setup of their LLC or C corp.
One of the things I'd want to come that I think there's been some confusion with the pass-through entity tax, and this now what was moved from a $10,000 SALT deduction to a $40,000 deduction. And I don't want somebody to say, hey, I can get $40,000 instead of the 10. I don't need to do the pass-through entity tax anymore. Hold up. That's for people within certain income levels, depending if you're married, filing jointly, or single. There's certain income levels, runs up about $400,000. And so after that, you start losing that deduction, and it drops back down to $10,000. It's number one. And number two, it's probably going to be advantageous anyway, because you have property taxes and other things that can be added to that, which may bring you over the $40,000 limit anyway. So you still want to do the pass-through entity tax. It won't hurt you. It'll probably help you.
And then, do you help people, like, say I want to start a business and I want to start a company? I'm trying to figure out what format to use: sole proprietorship, LLC, partnership, C corp, S corp. Is that something you consult on with people?
We do that all the time, and we actually work with attorneys that we help them, and we confer with them to help them make that decision. So we don't do the actual formation itself, but absolutely we make the recommendations all the time. And what we like to do actually is lay out particularly the tax consequences of that. So you're not just making a decision that I told you to make. I want you to understand why I'm telling you to make that decision.
Mm-hmm. Mm-hmm. There you go. There you go. So what else do we need to know about this tax season that maybe I haven't asked you? You're the tax professional. I'm not.
Don't wait to the end. You know what? Don't wait. Don't drive me crazy and call me 2 days before the tax is due. Call me early February. We'll get your taxes done right away. No problem. That's the biggest problem. And when you rush, you miss.
That's good advice.
And that's the problem when you're trying to push things out and get them done. 3 weeks later, you're going to think of that deduction you should have taken, or something, or some circumstance. We can always amend, but who wants to do that?
Well, plus we need to give you time to look over our tax documents and then figure out tax strategies, and maybe say, hey, if you did this, that, or the other, you can qualify for this. Some smart stuff there.
Absolutely.
Yeah. And it's interesting, starting in February. So I can't call you at 11 p.m. on April 14th asking for help.
You know what? You're exaggerating slightly, but we've had that happen. We have that happen more often than you think.
I'm sure you have.
Usually it begins with, I know you can't get this done by the deadline, but, we'll address that. I have a couple of very good tax managers that they're working till 11 o'clock at night on these tax deadline dates. Mm-hmm. For this very reason. People come in a week before, complex returns. We often do get them done. Sometimes we don't. We'll do extensions or whatever we have to do. But very often, at the very least, if you come in late, I can say, make this payment, and then we'll get your tax done.
There you go. So you at least get the payment in there. It takes a lot of time to process these things. Look for things on savings and everything else. What do you? What are some of the biggest mistakes, or some of the top mistakes you see that companies are making in error? What is there anything that is like your favorite pet peeve? Like, why are you guys doing this? Maybe, I don't know.
Well, I'm going to go. The one thing I'll say is a lot of companies don't reevaluate often enough. Every maybe third year, you really should take a hard look at your structure and what you're doing and how your business operates, and it's part of a tax plan, but it even goes beyond that. One of the things I think it doesn't have to do with tax, but it's one of my favorite topics, is budgeting. And a lot of companies operate without a budget. And I mean, most of our small businesses don't do a budget. And I think that's a huge mistake. Yes.
Really? They're just flying by the seat of their pants?
Absolutely. They look in the bank and see what they have, and that's that's how they're doing. But it's very important to benchmark that. And it's not even so much the numbers. The way you do the budget's what important is you're sitting and you're planning. You're planning your business. And you come up with you're going to do what you did last year if nothing changes. That's what it is. And things do change. But if you want to radically grow or do something different, then you should plan it out, have a plan, and make sure you're executing that plan. And your budget's going to be that guide.
Yeah. If you can, any money you can save, use this where you can hire more employees, and then technically you'll end up paying more taxes, but that'll drive you to where you're making more money too, as well.
It's also extremely important. This, to that end, and taking a little bit further, is cash flow. And that's where I think a lot of businesses, if they're really tight on cash, they tend to like the head in the sand kind of thing. It'll work out somehow. But you really need a good budget to run your cash flow, at least a forecast, to run that cash flow. And I see this all the time. One of the top questions I get is kind of a shortcut to that, is how do we get through February? Or, what money do I need to put aside in December so I can make it through this year? Great question, and we love to answer that.
There you go. There you go. So anything more that we need to talk about on the show before we go out?
I think we've discussed a lot of very important things. I mean, I think, planning is very important, and that's, really what it's all about, is taking the time doing this. Don't rush things at the last minute, and, and keep your business well organized.
There you go. What, I have to organize my business now too? What do you want from me?
Those receipts should not be in a box.
Yeah, I've seen, which box? Yeah. And how many boxes are there?
We've seen that. People have walked in with a big box, you turn it upside down, all these receipts come out. That's their expenses for the year. I had somebody send me 700 Google pictures of receipts. I said, no.
They Google pictures? Like you had to download it all?
They had a Google Drive, and all their tax information was these receipts. They had no financials or bank statements. It was just photographs of receipts, over 700 photographs.
Holy crap.
And yeah, I just said, no, you're going to put that in a spreadsheet, and I'm not opening 700 photos.
There you go. That's different than sending you a spreadsheet or something.
But it's the equivalent of the shoebox. Keep your stuff organized. Always be ready for an audit, because 3 years from now, you're going to be way more disorganized than you are today. So keep it all in a nice, neat package. Put it somewhere electronically as well. Great way to do it. And this way, when it comes, it's very easy. You have all your stuff right there.
There you go. All right. Well, very wild and very good stuff. So give people a final pitch out. How can they reach out to you? How can they find out more? How can they consult with you? I don't know if you offer any free consulting or just phone calls, et cetera, et cetera.
Sure. Our phone number, here it comes. Get ready. Get the pen. Get ready to write it down. It is 718-412-2570. Our website is solutionsbychs.com. Within solutions with an S, B-Y, CHS.com. We're happy to have your inquiry. It's dcarpenter@solutionsbychs.com if you want my email. And again, our phone number, 718-412-2570. Thank you.
There you go. Douglas, thank you for coming to the show. We really appreciate it.
Thank you.
There you go. And thanks to our audience for tuning in. We certainly appreciate you guys as well. As always, go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss, Chris Voss 1 on the TikTok, and all those crazy places in it. Be good to each other. Stay safe. We'll see you next.
You've been listening to the most amazing, intelligent podcast ever made to improve your brain and your life. Warning, consuming too much of the Chris Voss Show podcast can lead to people thinking you're smarter, younger, and irresistible sexy. Consume in regularly moderated amounts. Consult a doctor for any resulting brain bleed.
All right, Douglas, so this